So in this video I want to review where we've come so far in the FTSE 100 since my last couple of updates, and what I want to look at is a snippet from the 15th of March where you can see this path that I outlined for the FTSE, and there was these different resistance zones overhead where we were seeing congestion. If we fast forward to today, we can see this support here held, we can see this resistance line got broken, and when resistance gets broken it turns into support, which is what we saw here. We saw this resistance line intact, although we had a little fake out above, and this is the main resistance over the next month that I want to see broken. I'm expecting a further pull down around here with what's going on in Israel, Gaza, etc., and what's happening in the US with inflation, but overall I'm still expecting this path to be followed by the FTSE. So what I want to cover now is how we can capitalise on this next phase in the FTSE's progression in terms of reaching fair value. So a company that I'm looking at in a minute is called Ritala. They're a bus operator and they operate in both the public and private sector. So bus routes are highly subsidised by the government, which means there's a large proportion of Ritala's revenue which is secured by government funding. So if we look back on Ritala over the last couple of years, we can see the corona crash that happened in 2020, and then we can see we got down to this low here in September of 18 pence. Since then we had a double bottom formed, and we now have this channel. We have a clear support here which seems to be held, we have clear resistance here which is being respected. So there was a point here on the at the start of May where we're at 28 pence. Since then we've rallied hard, and there's been a lot of insider buying. So the chairman and the chairman's son, who both have an executive role within the business, have both bought shares recently. And what I'm looking for is a dip back down to this buy zone, which would correspond with the support. So I want to buy between this 29 pence, 30 pence region. And I would expect Ritala to really follow the UK's lockdown path and the FTSE. And I'd expect this all-time high, not all-time high, I would expect the pre-pandemic levels to be hit over the next couple of months. So moving on, we have got TP ICAP Group. So these are effectively a broker, but I really like this chart, what's happening here. If we look back into the corona crash, we had a sharp bounce, sharp recovery, and then you can see on the second lockdown it dipped back down towards those corona crash levels. Since then, again, we formed this channel. It seems to be being fairly well respected, and within this channel we've had thrust up, consolidation, thrust up, consolidation, and now I'm playing for that next thrust. So looking at the Fibonacci levels, the 0.618 is usually the one that gets most respect, and that's what we saw here. We saw the crash down, bounce back up, and now we're back sitting at this prior support zone. And I want to see here if we can thrust up and break through the 0.618 and meet the 0.786. So we're looking here at 220 up towards that 290 level. So the final UK based stock that I want to look at is JKX Oil. So commodities recently have had a bit of a boom. So you've probably seen oil rising up to $65, and we've also got gold that's looking to rally, and other commodities such as corn, soya, etc., and lumber in the US, which has really triggered this inflationary period, and why everyone's now getting worried that interest rates are going to increase, and that's going to have an adverse effect on the stock market and ultimately on all these tech firms that have been borrowing heavily at 0% or close to 0%. And now how do they behave when finance isn't as freely available to them? So in the UK though, looking at JKX Oil, so we can see we've got this strong support here, and we had this rise, so you can see we went up 150%, and now we're starting to drop back down to this support level. So just a bit of background on JKX. They operate in Ukraine and Russia. They're now debt free and they're highly profitable. And this trigger is, the reason we've had this sort of fall here is they've currently got a court case outstanding in relation to some rental fees between one of their subsidiaries and the state of Ukraine. Now this comes to about $14.1 million that they've fully provisioned for in the accounts. So i.e. there'll be no impact on profit and loss if it doesn't go their way. However, If it does go that way, there's a £14 million profit basically that's going to go on this year. And one thing I really want to point out on JKX is the fundamentals. So they're currently valued at a market cap of 36 million. However, if you actually look into their accounts, their equity is actually 176 million. So they're hugely undervalued. Obviously, this court case, there's a provision of 14 million in there, and that's worst case. That's what they'd have to pay back. So why is this company so heavily undervalued? We can see they're highly profitable. Like I say, they've paid off their debt now, so there's no more interest. And if we actually look at fair value, so for 176 million, what would the share price be? It would be 86 pence. And if we go back to the chart, we can see we had this rally up to 40 pence. We had a previous rally here up to 60 pence. So that's still nowhere near the fair value. The fair value is all the way up here at 86 pence. So it really does show you that on this chart, this base, if it can hold, we should fundamentally see a large price increase in JKX oil, especially with the way that the commodity prices are going at the minute. So I just want to see this pattern bottom out. I want to see the lower highs reverse, and I want to start seeing higher highs, and then I'm looking for that entry. I think it's going to happen around this level at 16 pence, but there's a real opportunity here of a threefold, fourfold increase in JKX oil. This court case is supposed to be heard later this year, and there's supposed to be a final decision, but like I say, the worst case is already built into financials. Okay, so moving further afield, looking at Alibaba Group Holdings. So this is the Chinese equivalent of, say, Amazon, etc. And we can see these have been on a long-term rally. And what's happened now is they've had a bit of a correction, a bit of a pullback, but they've got this strong support line that they're just approaching. You can see the prices here. It actually closed at 210. And you can see it is just sitting on that support line. So what I want to see over the next couple of months is I want to see this hold, and then I want to see a reversal. I don't want to enter now. I want to have confirmation that this support is going to hold. So I want to see some consolidation, and then I'm going to enter a trade, and I'm going to put a very tight stop loss underneath. The final point I want to cover is gold. So previously on gold, I did a prediction on the 8th of March, and this was when gold was at 1680, and my prediction was there was significant resistance, significant support. We can see here we've got the flagging pattern where it's got significant support, and we also had horizontal chart resistance, which was broken, and then it formed as support. So what I was outlining here is we'd have a sharp bounce from this, a bit of a bounce off the top resistance, and then we'd eventually break it. So with gold, what's happened today is we've had this double bottom that formed. So we bounced off of that support, we hit it again, and then we rallied hard, and you can see we broke above that top line, back tested it, and now we're moving higher. So the next level to look out for, if we look at the Fibonacci levels, again, that 0.618 level is always the level I'm looking for as the most traded level by the banks, by the hedges. So what I want to see is this rally come up to here, take a breath, and then continue. It wouldn't be a strong rally if this went straight through that 0.618. I want to see some pullback. And if we look at the longer picture of gold, we have a pattern called a cup and handle. So this is the cup, and then we're basically forming the handle, and then once this level's broken here at 2000, we'd expect to see a large bull rally in gold. So how do we take advantage of this? And this is another stock in that same video on the 8th of March that I looked at. Is Centamin. So Centamin has a high beta with gold, i.e. if the gold price moves up, Centamin moves up. And that's what I'm looking at with this stock, is we form this base similar to gold, double bottom. We're moving up from it. I want to see the gold prices get back to that 2000 and see if Centamin still follows that tight pattern with gold and thrusts higher. I mean, we hit this low here on a positive divergence, so price moved lower, but the strength of that move was weakening, and that's why we've seen this rally off. We're now in this tight channel, and I wanted to see this play out, and then I want to try and target this gap here. We can fill this gap at 160, come back down and look to bounce off. We've got the next gap here above at £2. I think there's a real strong bull case for sentiment. So that's my update for the week commencing the 17th of May. Just to have a look at these stocks, make your mind up, especially JKX. There's a lot of value there on the fundamental side, and in terms of the chart, it looks like there's a real good entry point coming up.